Hello everyone, welcome to My Money Universe. I hope all of you doing well and investing consistently. Today is an interesting episode where first we are going to see what all I have bought in recent times and what is my plan for near future. Then we are going to see how much of dividend I have earned till now this year, and I will give my thoughts on dividend investing in India and we will compare it to the rest of the world. We also had the volatile market in last two previous weeks. In one, we saw the market declining even 1000 points in a day, and in the second week, which was all about bounce back. Next, we have IMF chief economist Gita Gopinath explaining her outlook of India's economy in coming years, and according to that, we are going to see how it can be affecting my investing journey in the future. So let's start. So this week market has started to bounce back and my shares are coming back to positive mark. Many of the people are being too optimistic about the market in near future and investing heavily. Also, I'm hearing a lot about India's recovery and things going back to normal, and hopefully this keeps going on, but we must not forget that to see the next growth cycle or even to get somewhat clear idea of what the next growth cycle will look like, we need to first get back to 100% working capacity. And that means business going back to its full scale, production up to 100%, people going out and doing transactions with small businesses, and the most difficult one, jobs coming back up again, so people can have some money in pocket to spend. When all these things will happen, then only we can estimate how the next growth cycle will look like. If it's working on 90%, it's still a surviving place and difficult to predict future. Till then, it's all a guesswork. Let's see the maths here. Let's assume the economy is a business and the business which is running at its 90%. Now if you run a business, you clearly know that it is the last 10 to 15% which brings in the profit in the business. Because first you need to recover the money you had put in, then the rent of the place, your employees' cost of the goods used, and the taxes. After all this, it is that last 10 to 15% which brings in your profit, and sometimes in crores. Check out the biggest business houses in India only and you will see the same format in almost all companies apart from some small and mid-level new age technology companies. So that's why I was saying that first we need to get back up to 100% working situation before we can start analyzing the coming out numbers and hence make our idea of the future. Till then, it's all like driving in the foggy night. But at the same time, I take all these as the short time problems. I'm very optimistic about the next decades of India, and that is the whole reason why I'm investing my hard-earned money right now, and I don't mind portfolio falling down in that journey. So from the last portfolio update video, I have bought some more of Edelweiss shares for 20,000 rupees and brought my average a little bit more down. I have changed my money deployment strategy a tiny bit from past. If the market falls down further, then I'm going to change my earlier plan of buying just into Rain and Suntech, and I will go ahead and buy all the falling shares of my portfolio in small quantities to bring my average further down. Of course, except the infamous GVK. This change in strategy is just because of extra cash flow that my business will be making in future. We will be talking about it in a bit. So my Edelweiss average earlier was 88 rupees, now it's down to 81. I will try to bring it under 65 rupees by buying some more in next few days. I think company is going to do good with their wealth and asset reconstruction business, and by the next growth cycle, they will really be ready to capture more of the market share. They have enough cash to go through the downturn, and getting money even for their closed funds has never been a problem for them. Actually, they just launched a new fund which got the money from all big international institutions. Last few closed funds of theirs also did pretty well and gave return of 16 to 18% per annum. Butterfly Gandhimati is doing the best in my portfolio among the ones where I have more than 10% of my portfolio invested. It is up 83% and my average buying price is 167 rupees. I think earlier it was something around 200, and then after some more buying I have been able to bring it at my happy price. Other of my companies which are performing well are LT Foods, Asian Granito, which I love as you guys know, Suntech Reality, and Everest Industries, and hence I'm getting good compounding on my cash deployed. That brings us to the topic of how I am handling my cash right now as the company. As I have said it before, I manage my own personal finance as if I'm a business and I have shareholders to look after. This keeps my finance interesting and keeps me in check. Okay, now let's see how I am managing my cash right now. So my main business has started to pick up a little now, and soon I will be back to having at least 70% of before pandemic cash flow. Right now I'm at somewhere 40%, which is still more than double of what I need to take care of my expenses. So if the market stays down for a few more weeks, I will be having more cash in hand, and hence I will be buying more shares aggressively. Cash remaining in hand, 13% of total net worth. Okay, now we know how the cash flow is going to look like in future. So it's very important to plan ahead how I'm going to be using it. Of course, I'm gonna be using it to buy more shares. Now we're gonna see at what price I'm going to be buying more of these shares and how much. Suntech. I will be buying more of Suntech Reality if it reaches somewhere 230 level. But I will be happiest if I get it at 170 190 level. But for that, market has to drop down a lot more or something bad needs to happen in real estate market. I want to at least double up on Suntech. Maximum I want to be in 2 lakhs on Suntech and probably make it my second biggest holding. I really love the land banks they have and their future perspective towards creating value out of those. Rain Industries. It is same like I have said it in previous videos. Below it is my happy price, but if the market stays down and my cash flow increases, then I will slowly start piling up on 90 level. My aim is to bring my average below 100 level, and for that I need share price to be below 90 or better at 80. Every new 100 shares that I'm buying of Rain Industries is bringing my average price down by 1 rupees. I think I can bring it below 100 rupees in the future, so let's see where it goes. Edelweiss. Well, I'm planning to buy some more of Edelweiss. My happy price would be somewhere below 50, but I just bought it at around 54 and will continue to do so if the price does not shoot up. I think in coming portfolio updates, you will be seeing the increasing pile of Edelweiss shares in my portfolio. Rest of the portfolio I will just let it be and buy a very tiny bits of them to bring average down when and if the prices fall down to that level. There is nothing else that has attractive pricing right now and I don't think they will be falling to my buying level anytime soon. So no heavy buying you will see there. Alright, let's check out how much dividend I have earned till now this year. From Rain I have received 4,636 rupees. From Asian Granito 569.40 rupees. From LT Foods it is 2558.75 rupees. From Suntech Reality 447 rupees. Repco Home Finance 925 rupees. And from Everest Industries I have earned 120 rupees as dividend. So total comes to 9256.15 rupees. Pretty good. For 1 month that is 771.34 rupees. I think it's enough to take care of my coffee powder for every month. I have been asked about the dividend investing many times and today I wanted to explore a little bit in the video. So there are many reasons because of which I think dividend investing is not suitable for me living in India. If I'm living in US or Canada then it makes sense, but in India it does not. Okay, let's see. First is that the reason of dividend investing is mainly to generate monthly income and right now I'm not thinking about this. My idea is to grow my wealth more and more and not to churn it to take care of my expenses. Second reason is that in US there are companies with monthly, quarterly, semi-annually dividends. In India we do not. If you get dividends monthly, then it helps you in compounding your money if you choose to reinvest it. And the whole cycle keeps on repeating itself and hence grows your wealth consistently. Third reason is the taxation process. I don't like the fact that dividend income gets added to your annual income and hence increase your tax liability. I would rather keep my investments intact and let them grow there and not pay the stupid taxes. And the last reason is that the multiplication of value of shares does not happen that easily with the higher dividend shares. I'm not saying it's impossible, it happens with some of the companies. It's just an anomaly if it happens. Very few companies have that kind of a growth. Of course, I'm talking about the companies that give heavy dividends. So all these factors keep me away from becoming dividend investor. I'm happy if the company is giving constant dividends if there is nothing else to do, but the best thing is that if a company can find an area within the company where the return of investment can be more and hence increase the value of the company and the shares, and eventually it will come to me only because I own the shares of that company. I'm the owner of that company. In the current times, we have seen the market being very volatile, especially in the second last week when on Thursday market fell down 1000 points and there was good level sell-off that was going on at that time. But the next week brought back the market to its feet. This whole falling and going up made me really happy. It normally also makes me happy when the market is volatile because at that time I can really choose to buy shares that I love so much at a cheaper price. Same thing happened here also. I got the Edelweiss shares on cheaper price and hopefully will fill my basket soon in future. There were two reasons for this market fall actually. The first was the fear of second wave of pandemic and lockdown. So as if we are noticing in many parts of the world, the lockdown is coming back on the fear of second wave of pandemic and it is making market nervous. The whole euphoria that we have seen in the market some time back was based not on the real numbers but the optimistic future that investors were hoping about. But this lockdown is crashing their hopes down to the ground and hence the sell-off. Second reason is the failure of next US monetary stimulus that market was waiting for, but it did not get the approval and hence diminishing the optimism of investors. In India also the stimulus was nothing much and couldn't really bring the investors confidence to the market. So why did the market bounce back last week? Well, I think it's connected somewhere to the foreign investors coming back to India and investing heavily. So these are the reasons which are keeping the market volatile in current times. And maybe we will continue to see the same in near future too. Now next is the presidential result in US that can really affect the market. So let's see what happens there. Economy is still in bad shape. The World Bank forecasts that world economy will contract by 4.4% and India's economy will contract by 10.3% this year. And the recovery for India is going to happen only in 2022. Let's see what International Monetary Fund's chief economist Gita Gopinath has to say about future of India.
Long, because firstly, the health crisis is not over. So we are still living with the virus. We don't have an end to the pandemic. And as long as that's the case, people are going to practice social distancing. And we're going to see a longer time for recoveries in contact intensive sectors like, restaurants and hospitality, tourism. And so unless we are able to end that either through better ways of managing to live with the virus or through vaccines or treatments, it's going to take a long time. And it's also going to be an uneven ascent because what we are seeing is we're seeing low-income workers, low-skilled workers getting much higher than high-skilled workers. We're seeing increases in abject poverty. Up to 90 million will be added to extreme poverty just this year. And also it's uneven across the world. You're seeing emerging and developing economies, excluding China, that are projected to suffer more during this pandemic than advanced economies. So everybody is in a bad shape. So the return back to 2019 levels for most countries will have to wait until 2022. In some countries, it'll have to wait until 2023. So this is why this is a very slow recovery.
Right. Do you think India's V-shaped recovery is real or it is due to the pent-up demand, which is temporary?
So I would not describe most countries, including India's recovery, as being V-shaped. What we are seeing everywhere in the world is we saw a very bad collapse in the first half of this year. And then as countries have reopened, you have seen a partial rebound. So you're seeing growth come back. So you see very large negative growth numbers, and then quarter on quarter, you see positive growth numbers. But we're not getting back to 2019 levels. That would be a V shape. So it's going to take a long time from now onwards going forward to get back to 2019 just levels. I mean, not just even in per capita terms. So it's not a V-shaped recovery. It's much more gradual than that. And that's true for many countries with maybe the exception of China,
Right. So since I get from IMF outlook is that India can come back to pre-2019 level only by 2022. But government here in India is sharing lots of data, high frequency data to claim that we are kind of back on recovery track. And IMF says India's per capita GDP is going lower than Bangladesh this year. So how do we reconcile these two narratives?
What is correct is that there is a recovery that has started in India after the very deep collapse in the April to June months. I think the next release of data will tell you that it's much better than it was in April to June months. But again, we're starting from a low base, and it's what comes when you have reopenings. And so you will see a recovery. Now, the question is, when do you get back to 2019 levels? That, in our view, will take longer, well beyond, even beyond 2021.
Almost quite similar is the view of former RBI Governor Raghuram Rajan. India needs to bring in new reforms to become the attraction point of global investors and pump up its own infrastructure. Remember, crisis always brings some kind of unique opportunity, and if you can figure that out and execute the plan well, then the future will be quite bright. Hopefully government takes care of these things and it will really help the businesses in getting out of the mud they are stuck in right now. My investing strategy is simple. I will continue investing in what I understand, what I can understand, and hold it till it makes sense. Though what this pandemic has done for me is to make me realize that I actually have the character of a value investor. I'm not saying that I'm a great investor or anything like that, but just the character. Throughout the downfall of market, I never panicked in all these months of crazy crash and kept on buying whenever I got the chance. And now when I see what I own in my portfolio and at what price, it really makes me happy. Hopefully it will help me in growing my money further in future. Okay, it's time to take question from you guys. If you want to ask any question, then just type it in the comments below and I will try to take it in the next portfolio update. It is from Kiara Sharma. What is your plan with Everest Industries? I own it and want to know why do you own such a tiny part of Everest in your portfolio? Is it not good enough or what? Okay. I always wondered why nobody ever asked me this question actually, because Everest Industries is only 1.73% of my portfolio and it seems kind of useless for even having it, because then you have one more company to read and do analysis about. Well, what actually happened was that there were three companies that I was tracking for some years and wanted to buy but never got enough confidence in them to go ahead. Sometimes it was the price of the share, sometimes the management's decision. It always stopped me to just go ahead. Everest Industries and Suntech Reality are two of those companies. So what happened that as soon as the market started falling down, I jumped into buying the Everest Industries first. My plan was to buy it till 4% of my portfolio and then make it go to 8% after a while. But when the market fell, it just kept going down and it made other shares cheaper too. And to that level that I couldn't resist myself from not buying them. So I started averaging everything else and it kind of made Everest Industries a little less interesting for me. I even bought Suntech, but in the meanwhile Everest Industries got left behind. And I'm happy right now for it to be not a very significant part of my portfolio. Do I like Everest? Yes, I do. Do I like it at this price? Yeah, kind of, but I like it at my price more, that is 171 rupees. So Everest will just stay like this in my portfolio for a while, and in the meanwhile I will keep reading and learning more about it and its competitors, and then let's see what happens. That's it for today's episode. If you liked the video, then please press the like button to help my channel in growing more, and tell me in the comments below whether the video helped you in any way or not. With that, I take your leave. See you next time, my money universe.